Hey everyone, welcome back to the channel. Today we're tackling one of the biggest investing questions beginners have. Should you buy ETFs or individual stocks? If you've ever wondered which one makes you more money, which one's safe, or what's better for beginners, this video is for you. By the end, you'll understand both options clearly with examples, pros and cons, and how I'd decide between them. Let's jump right in. Before comparing, let's make sure we know what each one actually is. A stock represents ownership in a single company, like Apple, Tesla, or McDonald's. When you buy a stock, you're basically saying, I believe in this company and I think it'll grow. If the company's value increases, your stock price goes up. If it struggles, the stock drops. Here's an example. If you buy one share of Apple at $180 and it rises to $200, you made a $20 profit. But if Apple falls to $150, you lose $30. So with stocks, your success depends on one company doing well. ETF, or exchange traded fund, is like a basket of many different stocks. Instead of betting on one company, you're buying a whole group. Here's an example. If you buy the S&P 500 ETF, SPY, you're instantly owning a small piece of 500 biggest companies in the US. Apple, Microsoft, Amazon, Google, and so on. ETFs trade just like regular stocks, but they automatically spread your money across dozens or hundreds of companies. So even if one company drops, the others can balance it out. Let's break it down simply. Individual stocks equals higher risk, but higher potential reward. ETFs equal lower risk, slower but steadier growth. If you pick the right stock early, like Apple in 2005 or Nvidia in 2016, your returns can be insane. But if you pick the wrong one, like Blockbuster or Bed Bath & Beyond, you can lose most of your money. With ETFs, your risk is spread out. You probably won't double your money fast, but you're much less likely to lose everything. So it's like stocks are a roller coaster and ETFs equals a smooth road trip. Here are the pros of ETFs. Diversification. You own many companies at once. Lower risk. One bad company won't destroy your portfolio. Less time. You don't have to constantly research and track individual businesses. Consistent returns. Many ETFs like the S&P 500 average 7 to 10% per year long term. Now the cons. You can't beat the market easily. You are the market. If one stock in the ETF skyrockets, your return is smaller because it's diluted among others. Now the pros of stocks. It has a higher upside. If you pick winners, your returns can crush the market. Dividends. Some companies pay more dividends than ETFs do. More control. You can build your own custom portfolio of companies you believe in. Now, the cons. Much more risk. One mistake can wipe out gains. It takes time to research earnings, financials, and trends. Emotional swings. It's harder to watch big ups and downs. Let's compare results. If you invested $1,000 in the S&P 500 ETF, SPY, 10 years ago, today it would be worth around $2,800 to $3,000, depending on dividends. But if you invested $1,000 in Nvidia, that'd be worth over $50,000 now. However, if you picked Bed Bath & Beyond, your $1,000 would be basically zero. So ETFs are safe average, while stocks are high risk, high reward. If you're just starting out, ETFs are the smarter choice. They're simple, diversified, and you don't need to know everything about the market. You can just buy one ETF like VU or SPY, which are my personal favorites, and hold it for decades. That's what a lot of professional investors recommend for beginners. Once you understand the market better, you can start adding a few individual stocks you believe in. Personally, I like a mix of both. Here's what that might look like. 80% in ETFs for safety and long-term growth. 20% individual stocks for fun and higher upside. This way you get stability and excitement without risking everything on a few picks. So, is it better to buy ETFs or individual stocks? The answer is, it depends on your goals. If you want steady, stress-free growth, go with ETFs. If you want to take bigger risks for potentially higher rewards, mix in some individual stocks. If this helped you understand the difference, make sure to like, subscribe, and drop a comment. Are you more of an ETF investor or a stock picker? See you next time. Thanks for listening.